This screencast will be explaining the accounting concept petty cash. In simple terms, petty cash is the amount of cash kept on hand used primarily to pay for expenditures occurring in day-to-day activities. For example, the petty cash fund may be used to reimburse an employee for an expense incurred for work. When the petty cash fund starts to run low, the employee in charge of the fund will request a check to cash to replenish the fund. So, to establish the fund, we open a debit account underneath the title petty cash and we credit this to cash. So, for the sake of our example, we're going to say that our ice cream store puts in $150 into their petty cash fund and therefore we credit it to cash. The description for this is just to establish our petty cash fund. There is no decrease or increase in assets as cash has not yet left the business. Now, to understand how the petty cash fund is written in a general journal, we will use the example of an ice cream store because who doesn't enjoy ice cream? But first, there are three main steps to do with the life cycle of the petty cash fund. The first one is establishing the fund. The second is making payments from the fund. And the third and final step is replenishing the fund. So first, we need to establish the fund. The second phase of the petty cash fund is making payments from the fund. There are two main ways in which this can be cash can be spent from the fund. Cash can be taken directly from the fund, or an unlucky employee will have to take one for the team and pay for it and wait to be reimbursed. Either way, the guard of the petty cash fund will take down the receipts for any use of the cash. In this step, no journal entries are required. Only once the petty cash is replenished will a journal entry be made. The final step is replenishing the petty cash fund. The petty cash fund guard then accumulates all receipts encountered and notes it down in the petty cash replenishment report. The receipts are used as documentation, and here is an example of the replenishment report. The total of receipts indicates to the company how much is needed to replenish the fund. So, as we can see here, our company puts $150 into its petty cash fund. There's $70 remaining not spent, and $80 is requested to replenish the fund. So we spent $20 on postage expenses, $47 on supplies, and $13 on miscellaneous. So our total is $80. A journal entry is then recorded, and as we can see, the expenses account increases with each expense and expenditure, therefore decreasing the cash account for the amount of the check needed to replenish the fund. And the description of this account is to replenish petty cash fund and record various expenses. In short, that's how you record a petty cash fund in the general journal. However, there is still the issue of cash over and short, but we will discuss that next time. Thanks.